What's up, guys? Just wanted to let you know about the Blockworks Digital Asset Summit, which is back in New York, March 24th through 26th. We'll have top speakers from leading asset managers, financial institutions, DeFi protocols, crypto companies, and policymakers all under one roof. Think of BlackRock, Coinbase, Robinhood, and more. Follow the link in today's show notes to buy tickets and make sure to use code 0x200 for $200 off at checkout. See you there. Nothing said on 0x Research is a recommendation to buy or sell securities or tokens. This podcast is for informational purposes only, and any views expressed by anyone on the show are solely our opinions, not financial advice. Boccaccio, Ryan, and our guests may hold positions in the companies, funds, or projects discussed. What's up, guys? Welcome back to another episode of 0x Research, another live stream of 0x Research. Danny, how you doing?
Good morning. Good morning.
Are you having a good time?
I'm doing great. How are you doing? I'm trying to be positive today. Let's be positive.
Yeah, I'm doing very well as well. Before we get this stream started, I wanted to give a quick shout out to Lightspeed IR, our new investor relations platform for Blockworks, not Blockworks Research, for Blockworks, I think. We are working with Solana to offer investor relations for Solana. I think we're gonna do a bigger release today, but just wanted to give a massive shout out for it. I think today or this week at some point. Yeah, Danny, I think you might have a bit more information on this one than me, but if you want to,
yeah, I'll pop this up here. But you caught the gist of it. Basically, we kind of pre-announced this platform, and I know David Effercap was at in Hong Kong and pre-announced it there as well, the platform. But I think Bach kind of captured it. It'll sort of be an investor relations platform for the Solana ecosystem. So funds, protocols, the Solana Foundation themselves I think Blockworks itself is trying to push into this angle of investor relations and getting more concrete into the details of protocol operations with quarterly reporting and understanding better metrics and token transparency and all these different things. So I think this kind of partnered with Solana is a great opportunity for that whole ecosystem to get on board that train. It's certainly the direction that the industry is heading, like more. I mean, it's not really compliance because there's not regulations around these types of things, but it's sort of like setting the industry standard for compliance, I think, is kind of how you'd want to view it, and like what things are reported and on what basis. Similar to how businesses report earnings and share details regularly with their investors. That's kind of where we're trying to push. So this platform will have a bunch of data like that on all the Solana related protocols, but we've also got some new analysts, maybe in the 0x chat you are familiar with Toma or Zaki. And Joe as well will be writing and putting out content, and our very own Carlos from the Blockworks research team as well will be leading and driving some of that content as well, I think. So definitely some fun and exciting stuff I think you'll see coming out of this.
I think you kind of hit the nail on the head there, specifically around like how I feel like we talk about this all the time. The industry needs more of X, Y, Z, but there is a clear issue in how these protocols communicate with potential investors, both on like the retail investor side as well as on the professional investor side. And this is something that we're working towards closely with the Solana Foundation to fix, to improve. So if you are not Solana but are interested in investor relations, either Effort Capital has already reached out to you to chat about it, or you should reach out to Effort Capital to talk about it. I'm sure they're taking on more and more clients as we try to build this out and be a net positive for the industry. Okay, unless we have any other comments, I'm going to get into the 3 topics that I've managed to scrape by together for this Monday/Tuesday episode. Are we ready?
Yeah, let's run it. If you don't know who Effort Capital is, I mean, reach out to anybody that you have as a contact from Blockworks. We'll put you in touch.
We'll figure it out. Okay, I'm gonna start off with this Morpho raise thing, and I need to actually find the thing I just realized.
Yeah, I have it here.
Zaki's really upset with you, by the way.
You're upset with me?
Zaki is upset with you because you said his name on the screen.
Oh, is he? That's unfortunate.
That's okay. He'll figure something out.
He's gonna end up on the. He's gonna be on the pods.
Yeah, eventually. Yeah, it'll be fine. And he doesn't realize that I'm gonna dox him immediately because my brain can't make the connection between real name and pseudonym. Okay, so big Morpho news. We had big Aave news last week. Kind of positive and negative on the Aave news. The negative being the conflict. The positive only news for Morpho is that the Apollo Global is going to acquire up to 90 million Morpho tokens over 4 years. I have a few things to say about this, and I want to make this with my face like this, if you don't mind. I am a little tired of announcements that don't talk about when something was signed, at what valuation it is happening, if there's a discount. And maybe this is something that we can work on the IR side so that people can know more and more about this. But I think this was a similar thing that I had with the Uniswap news, BlackRock buying Uniswap, or BlackRock getting involved in Uniswap. And there was another thing as well recently. Layer 0 and Citadel, where we're just not seeing any of these figures. We're not seeing any of like where they bought it. And I think this is like a remnant. It's a remnant of the old cycle, maybe a little bit. Where like any partnership with a traditional financial company was like, wow, this is huge. We're like getting involved in the real world. And it's like, well, now everything is kind of involved in the real world to an extent. So I would appreciate seeing some more information. I do like, on the other hand, I feel like Morpho is kind of an under considered token to an extent. Like not many people are like, oh, I'm bidding Morpho, but more people are like, oh, I'm bidding Aave. I think the primary reason for that is that Morpho doesn't have any fees. I think everything is captured at the curator level or like whatever the front end level. Go ahead.
Yeah, they don't have their fee modules turned off. They've said that they're explicitly like in growth mode today still. So there's no revenue today, but you could hypothetically model it out assuming some rate
like
that they charge.
Yeah.
So I think people, if you're doing a model on Morpho, then you'd assume some effective interest rates on what they could charge, or some bips that they could take within the product. But yeah, today it's like not turned on, which is not too different really from like the Uni token, for example, for a long time. I agree with you though. I think some of the things that would be great to see are price paid, or if there's a discount, maybe I think the way that this is framed is quite vague in terms of a deal to acquire up to an amount of tokens over a long time period of 4 years. Could mean anything. Could mean that they have structured like a contract in some way. Maybe they'll use the software and then therefore like buy an amount of tokens like per month over 4 years, and maybe that amount will change depending on services rendered or something. It's really hard to say. It'd be great to see some more details, but that's all we get.
Yeah, I imagine because they're traditional financial company, they'll have to disclose to an extent somewhere at some point what they bought and what they didn't buy. But I don't know how it works, and I'm hoping that things change. In terms of how much do you like? One of the SaaS things is like the death of SaaS thing is that you can just build out a lot of these things yourself. I think Aave gets forked a lot because they have a licensing thing. Morpho hasn't gotten forked that much. People can just build on top of it and use it, right? Like Felix operates as and I talked to Charlie about this on the pod as well. Felix operates as a curator of Morpho and have their own front end, and like you can just use their front end. The back end is completely Morpho, but the Felix guys just charge for curation. I'm wondering how much power Morpho will have once they come in and they say, hey, it's been free all this time. Now it's 50 bips, or like now it's 25 bips. And like we talk a lot about software dev, SaaS dev. I think a bit overplayed, but maybe not like for everything. But so like there's in the industry level software that just isn't easily replaceable. I don't think this is a hot take. Like I don't know, SAP and stuff. I don't know if that's if you guys have ever used it. I don't like nobody's gonna replace that at least anytime soon. Anyway, the general gist is like we have this, but versus on the crypto side, now you're saying like not you, but people are saying, oh, like they'll just turn on a fee switch. But Morpho's purely a back end thing. They don't have any distribution on the front end. I think they don't have any distribution on the front end. When you think about lending, you think of Aave. And like Morpho is distributing itself through Coinbase, for example. They implement this thing. Why wouldn't like audits are a thing, obviously, but if this code is open source, which I'm not sure if it is, but anyway, like let's say if you're getting a already audited piece of tech audited and it's just a fork, I don't think it takes that much time. I mean, there'll be a cost associated, but if the Felix team was like our cost for the audits is 50 grand, fees we would pay 150 grand per year. Like does that make sense?
I think it makes sense. I think if I look at the quote statement in a vacuum today, I would kind of say like there's Morpho, there's I guess Euler is in a similar bucket. Like there's a few platforms with kind of like vaults and curation, as sort of like a product and a service. So I guess the actual question would be more like, if Morpho turned on a fee structure to curators, would they move to like an Euler or another platform? I think the other question you have to ask is like, how much liquidity is being shoved into Morpho today because it comes from Coinbase or wherever else. Now you might be asking like, I don't know, is Coinbase gonna, strip out Morpho and just drop in their own version of the same software? They have all the customer deposits anyway. They totally could. I think it's a risk, but they've also they've backed Morpho. So I don't know that I see the Coinbase Morpho relationship as more symbiotic than anything. I think the fee thing is always a good question, but I feel like this is a conversation we have about everything of like, well, if they turn on fees, won't somebody else just make another one and undercut them and then take away? And it's like, yeah, I think this does kind of happen, but I don't know. You see this with Aave as well, and you mentioned it first of like, Aave's been forked a million times, but basically all the deposits that Aave attracts have stayed in Aave, and it doesn't really matter if you copy it and make it slightly different and charge no fees. Like people are just going to stick. I don't know. There's a safety and security aspect on the crypto side of things, and then also just like, I don't know, lendiness. And then after a certain point, there's just so much capital there that it makes sense to interact in that place. I think for Morpho, you're probably hoping for a similar thing. I think obviously the Coinbase relationship is like, that's pretty material. So I would almost make the same argument in the sense that assuming, they're on good terms with Coinbase, like, and Coinbase isn't going to like rip them out and just drop in a, AI vibe coded version of the same thing, or just, copy the open source code if that's legally okay. I'm not sure what the license is, if it is or isn't. Then maybe it's kosher, maybe it's not. But I don't know. There's a lot of path dependency there. I think we've seen the same thing with, I think there's a similar one with Kalshi and Robinhood, where they basically partnered with Kalshi to do prediction markets. And then like maybe a few months after, they announced that they were building their own in-house kind of prediction market platform, with probably a goal to just do exactly what you mentioned, of kind of strip them out and drop their own solution in. So I don't know. I think there's a case by case kind of argument that will need to be made for, I don't know. This is a conversation we have about every every type of application that goes from not charging a fee to then charging a fee. It's like those are the downstream questions that come with it. How much of a moat do you actually have? If you do, then you're probably fine and you can charge fees and increase fees. And if you don't, and all of your customers can leave quite easily, then you're going to have a problem.
Yeah, I
think
think
it's not clear in this case.
Yeah, it's not. I mean, I think in crypto, it's a very fair conversation to have a lot of the time, though, because vendor lock-in is, I think, not really a thing, and also people are very mercenary and able to switch and leave at any time, like especially users. So I don't, it also depends on like who they charge. If they're charging users, that's bad for the front ends, and if they are charging the front ends, that's bad for the front ends. So it's
Yeah,
kind
there's
of a
different ways they could go about it, which
yeah.
would have different downstream impacts. I think I would imagine that, I don't know, they've designed the product around the curator model and like attracting really like risk curators rather than sort of like users, and they've attracted users by doing the partnerships. So it seems like it would make more sense to either directly charge like a like a SaaS sub fee to like a Coinbase for the integration, and then maybe take some bips from curators that generate revenue on the platform. But I don't know.
Great way to end it by saying I don't know, but I
don't
agree.
know.
There's really nothing.
I don't know.
Okay,
We'll see.
I guess like what there's apart from this Morpho thing, which we said we were going to be positive about, well, we kind of shat on it. It's fine. Well, to be fair, I started, but there's two other pieces of potentially positive news. One is that Dragonfly raised 650 million United States dollars for their fourth fund. This is ridiculous. Like, I don't know. I've seen, now this isn't anything against the Dragonfly guys. I think they have some really smart guys, obviously, and venture is very difficult. And I don't know what deals they get. It's difficult for me to see like which ones they allocated more to, which ones they allocated less to. If you go over their portfolio, it's not, I would say, outperforming other VCs maybe. But I think this is pretty positive in that it shows there is still some form of liquidity coming into crypto. Like one of the big things is, well, VCs are very important to the crypto economy. Obviously, despite what people might say that VCs are bad, some are not great, but you still need their capital to fund projects, especially in initial days. So, like, and $650 million is not a little amount. So maybe, I don't know, takeaway here is that it's not all doom and gloom.
I'd be curious. I don't know how big their prior funds were by capital raised, but I guess I'd say I'm surprised at the dollar amount. Like I would expect the lower number, I guess, just in the sense that, I don't know. I think if you look to like 2024, like that sort of vintage of protocol that went public, that was like an especially high watermark for things that absolutely did not make sense by the time it reached the public market. So I guess if they sort of like raise a certain amount of money kind of prior to then, and then public market prices of a lot of these things have come down since then, I would expect that it would be harder to really put the same or a larger amount of capital into new protocol investments. So I'm surprised by that. Like it seems like it'll be difficult, honestly, to do that unless the valuations that they're raising at, that protocols are raising at, are still just anchored to a high bar. But we've seen so much like public market drawdown that would just be very surprising to me, unless expectations are still quite high on the VC side. I'm not sure.
Yeah, I will say one thing. They also, like, I completely forgot that they invested in Polymarket, Rain, and Ifina. So I imagine they're doing pretty well. They also did Lighter, which I think is also should be doing well. But yeah, I agree with you. Like, I think I would have expected maybe a smaller raise. but I think it also makes sense for capital to congregate around like better venture capital for funds. As like, I feel like before everybody had a venture capital fund for you see these cap tables with like 40 people.
Yeah, anybody that made 8 figures in 2021 opened a fund.
Like, oh, now I'm a VC. And then I guess like some of those are getting flushed out. I will see this, I imagine, on the liquid side as well, where it's like, I don't know, someone just die out, they can't make money, they have to return. People
Yeah.
call capital back. And like the good ones stay and maybe raise a bit more money, and that's why you get outsized fund. Just $650 million is a lot. Like you can do 3 monad rounds, you know, and you can just take the whole round. So
Yeah.
I guess that's why I was surprised. I wonder what their mandate is. I wonder what they're gonna put, like if it's just crypto or if you can also do AI stuff. Because I think Polymarket still fits into crypto because it uses crypto rails.
Yeah.
But I don't know if all of them do. Yeah, I don't know. I guess like I was expecting some more pain before we started seeing funds are able to, because we saw another one as well recently where a fund announced that they raised. Oh, obviously like A16Z announced that they raised a massive amount of money, but that one I don't consider. I don't know. I guess I was just a bit shocked. No
Yeah.
shock.
With A16Z, I think it's just expected at this point in time. I think they have kind of the same problem though. Like, I don't know. We could probably go back and look at, I mean, that's sort of the nature of venture investing is you're just going to end up having a lot of zeros. But I feel like just the amount of capital that they raise, they're really forced to like to spray into a lot of stuff that maybe they otherwise wouldn't if they didn't have so much capital. But maybe that's just the nature of like becoming the biggest venture fund. I don't know.
Yeah, I think I saw somebody today talk about, no, the other day on an X article, which are often very uninteresting, but they were talking about how VCs invest. And I think a lot of those like funds that I said are probably like the VC funds, the smaller ones. Everybody who made 8 figures who in 2021 and were like, I'm gonna start a VC fund, they probably overinvested in like a bunch of copycat protocols, and they just ended because it wasn't like the way that it was in 2021, where you could, I don't know, invest in an Aave fork and then make a ton of money.
Mhm.
Or like an L1 and stuff. Versus now, like I don't know what Monad's most recent raise was. Was it 2 bill at 2 bill valuation?
Well, they did the ICO on CoinList or on Coinbase.
No, but for VCs, I think it was also 2 bill, and it's fully diluted 2.2 bill. So
yeah, I think it was similar. Yeah.
So it's like, I don't know. It took 4 years. 4 years on your investment, and you're up 11%, 10%. Painful.
Yeah, it's just kind of the way it goes. I guess the upside, like when I look through A16Z, is I know historically, you know, of course they're gonna have access to all those best deals. So you know, like when Sui and Aptos and all of those massive rounds were being done back in 21, 22, like they certainly were probably some of the larger investors in a bunch of those deals. And while the public token prices of a lot of those things are down from their highs, like I think they're certainly up from like those seed raise rounds quite significantly. So hard to say. I mean, if a lot of these things in public recently in the past 1 or 2 years, like it might actually take a little bit, maybe more time before it changes kind of how the future venture viewpoint is in terms of like amount of capital to allocate, if that makes sense. Because they, you know, they invest and then they have to wait a long time for the thing to even go live, and then they have to wait for that kind of vest period as well to really like see sort of what happens with the investment. Obviously, you know, you kind of know, like, you know, roughly kind of market valuation, how some of those things are doing over time, but it doesn't really like necessarily hit the book until a few years later. So there is kind of like a lag period there to, in terms of maybe an adjustment in how they approach things.
Yeah, I agree, but
maybe the investment view is wider now. Like I feel like previously crypto was very much like
The
okay,
frontier, and you only invested in crypto.
yeah, it's like, okay, we're only going to buy L1
Yeah,
tokens, and now, but now I think there's like a broader view of like, you could look at, Stripe is doing their Tempo
yeah,
chain, and like it's a bit more connected to fintech and finance and TradFi, and so there might be a broader range of investment
yeah.
opportunities.
I mean, there was a whole like class of not class of, but there was an entire type of VC fund that only did like crypto infrastructure, which and even recent like Alliance, I wouldn't say like made their name, but their focus was only crypto applications, which is like a crazy thing to do. Like you're
Yeah,
only
consumer.
focused on crypto applications. I mean, I guess like you want to build a niche, whatever, but or like you want to invest in what you know, but even then, that's like a pretty crazy way to approach venture. I don't know enough about venture to like know if that's the right way to do it or not. I think in the alliance scenario, it might be a bit different because they're incubating a lot of these products, and I think they have like a venture builder approach. So it makes sense to have like specific niche. You're hyper focused on it. You know, like what works, what doesn't work. You have kind of a formula of getting these products out, but
And they're very early. They're very early stage, and it's small check sizes. Like they're
yeah,
not shipping 10 million
no,
into a huge round, right? They're putting smaller checks into teams that are like, hey, we're going to build this consumer app and just see if it works.
yeah,
So I think that like the approach like really works for them there.
yeah. But versus like I feel like Hack VC maybe or Polychain, like I feel they do like these massive VC rounds, right? Because their ticket sizes, they do these massive L1 or infrastructure rounds. Because I think their ticket size is too large. Like they can't do an application because those historically don't raise as much money. So and I don't know, like I know Polychain made a butt ton of money on Tia, for example, but they managed to sell, I think, quite a bit. But I imagine there's at least with the new class, it's like Monad and Mega ETH are both cool, and I think Mega ETH is doing fine because I think they raised much less at lower amounts. But if you just mark to market your Monad stuff for years, for 6 years, maybe 5 years, based on like private valuations first, and then now, I don't know what are you gonna do. Like it's just a tough market. Like everything you have to,
Yeah, and that was years ago too, right? So like
yeah,
what's raising today? I think obviously the market's very different. Like we don't have like there aren't 10 unreleased L1s now that are raising $200 million for their seed. Like that's just not happening. So certainly some of it is, I don't know. There's been a lot of prediction market excitement. I've seen there's definitely been some raises in that realm. Like we're seeing more of these like crypto X AI
yeah,
things and like agentic apps and different things along those lines. I think the set of opportunities is definitely different. Tempo is probably maybe the good example. I guess there are in some cases some blockchains, but they are more like,
but even Tempo's like paradigm is essentially building it out themselves. Like it's very much to me like a venture builder style of
yeah, it's similar to like Arc in that sense, in that
yeah,
it's like, you have Circle who's like, we should build this for our purposes. And I think you see, I kind of look at Tempo the same way, in that it's like, okay, Stripe says, hey, maybe this makes sense that we have something to build out for our purpose.
yeah. And just like maybe to tie it back to Dragonfly, one thing that Hasib I feel like says quite a bit is this isn't the end state of blockchains. And so he would like when people were like, oh, like we shouldn't invest too much in infrastructure anymore. At least he'd said this like a year ago. I don't know if this is still a spot process. Um, But if returns on L1s are really low and no one invests in them, we might just be stuck with the current set of L1s that we have, which isn't necessarily a bad thing. Like you have Solana and ETH, Plasma Hyperliquid, Mega ETH Monad. Surely, like I don't know, some of these succeed and figure it out. Base Arbitrum,
BNB,
BNB,
Tron.
Tron. I always get worried when I count those, but yeah, like
You got to include Asia, man.
or is this I don't know, $650 million going into a fresh set of infrastructure projects? Who knows? I guess we're gonna see. But like you said, I haven't seen any like, I don't know. I feel like all of those. I don't know if you also have these channels, but I deleted them now. But before there was like this channel that would just send in every single raise that closes, like what valuation, who were the investors, etc. on Telegram. I feel like I haven't seen an L1 in there in a long time. Like you said, it's a lot of like prediction markets.
Yeah. The L1s, it's like the tempos and the arcs, and
Yeah.
the other,
It runs serious stuff, but not like, yeah. I don't
yeah,
know. The depth
there's
of
been a change.
infrastructure investment could be very interesting for crypto.
The other stuff has been like all these trading apps. Like everyone, I don't know. There's so many teams that are working on like, we're going to build the everything trading app. It feels incredibly saturated as a space. Like some of them are, hey, we're making
like FOMO.
FOMO is an example. There's like, I think Liquid is one. But there's a million of them. It's like, it's kind of like the Axiom, but the next generation of that, where it's like just put all of the crypto trading applications into one broad like front end interface for people, making a full kind of like trading platform. But I feel like that's been an area where I've seen a lot of different teams and raise announcements as well.
God, it's so funny. I don't know. There's like, yeah, Axiom made so much money before they left. So crazy that they just never launched a token, just made a lot of money and just left. Which I think is,
would you?
No. No.
It's an interesting. It's funny. It's a funny thing we say this frequently of like, wow, they made so much money and they didn't even like launch a token. But I wonder, like, if they launched a token and then the token went down 90%, like, would you be more or less upset that they launched a token? I imagine that the answer is probably you'd be more upset if they launched a token.
I think either scenario, I'm gonna be upset.
Yeah.
So. To be fair, I didn't even trade that much on Axiom, so I wouldn't have gotten a good airdrop. But like for you, for example, like you were pretty early to Axiom. Like,
yeah, I used it a little bit. I think there was a point in time where
you realized,
where a token and an airdrop like would have been plus EV, and I wrote about it. I wrote about kind of the opportunity there. Certainly for like YC, that was a great investment from them.
Yeah.
But there was a point where like that got eroded in terms of that,
Yeah.
After me being early, then there's like, okay, hundreds of millions of trading volume on here. Like I'm not, it no longer means anything to me. And so I just kind of gave up on the idea. I felt pretty strongly about the idea that it was a very low probability that they would launch a token. I don't think there's anything wrong with making a good product that makes money, and doesn't release a crypto token. I honestly would almost prefer if we had 10 times the number of apps that were just good products that made money and didn't have tokens.
I would not prefer that. If something is making money, I want to be able to invest in it. Like same thing with.
I want to be able to invest in it, but I don't want them to launch a worthless token that doesn't have any relationship to how much money they're making.
Yeah, I guess they're always kind of stuck as well, in which, yeah, I get what you mean.
Let's tokenize their equity and then just let me buy that.
Yeah.
That's what I would like to see.
The SEC is going to come get you. Talking about 3 to 4 level agencies. You're sent this in the morning, but the CFTC issued a statement on prediction markets. I'm going to open this up and take a look. If you want to give a bit of a background, I'm also happy for you to do that, but up to you.
Yeah. Michael Selig, he actually dropped a Twitter post, but I'll just share this one. He shared a video of him talking about this, but figured easier to just share the quote. But he basically said something along the lines of the CFTC will no longer let state governments kind of undermine the CFTC's jurisdiction over prediction markets, basically saying there's been a lot of lawsuits in different states against prediction markets, labeling them as gambling or casinos, or like trying to adjust how they're sort of, maybe they're not allowed in certain states or jurisdictions. It seems like the CFTC here is trying to take a stance and say that they have kind of full decision-making control within the U.S. to kind of make rules and regulations around them. I'm not like a legal expert. I can't really say whether in practice that means anything. I don't know. I think for a long time, states. there is this sort of like state versus federal government approach to a variety of things, like legalization of drugs, for example, is a classic one, where there's been headbutting over maybe marijuana is banned federally, but states say, hey, we're going to legalize it and it's fine. So this is, I don't know, it's just an interesting case where we're seeing kind of this same battle happen, but in the reverse direction, where the Fed or the CFTC is saying, hey, these should be okay. And certain states are saying, no, we don't want them. Interesting to see how it unfolds. I think naturally, as everyone knows or currently feels, prediction markets have been a pretty divisive topic for the past, ever since they blew up, really, like at the end of 2024 with the election. So not surprising to see this here. I think the big issue with the kind of the conversation is like some extent of the activity on the platforms is basically gambling, but they are, they're trying to market it as, this like commodities derivatives product. And so, in some of their advertising and their marketing and their language, it's like it seems very much just like, a sports book. Bet on your favorite football team on football Sunday on Kalshi. But then when it comes to speaking to the regulators, it's like, no, these are very advanced and, truth seeking markets that should be regulated by the CFTC. So I think there's kind of an inherent tension there from both like just the way that the product is marketed versus the way that the prediction markets are sort of talked about in terms of how they should be treated, like from a regulation standpoint, which is interesting.
I don't, like you said about yourself, I'm also not a lawyer and I don't have a lot of legal training. To me, I also know that the US is like a very specific case in which states are, some people's ideal notion is that the federal government has as little responsibility as possible and the states have as much responsibility as possible. Just from, I guess, a Europore's point of view, to me, it seems like something the CFTC should probably regulate. I don't know enough. And then,
yeah, really, I think that issue often comes down to whether you like or dislike the thing being discussed, and then you'll take the appropriate side on whether the state or the federal government should regulate it. I think that's often what it comes down to for many individuals, and they're willing to flip flop on that point. In this case, though, it does seem like the Fed, the CFTC, is backing prediction markets. So, I think in the immediate term that can only mean sort of like good things for them from a potential risk or lawsuit standpoint. But
for the prediction markets, right? Like it's
for the prediction markets, yep, in their favor. Longer term, I guess it opens up the question of like, 2024 was a turning point in terms of the administration. If the US kind of flips the opposite direction in 28, do we see some of these like decisions get rolled back in the opposite direction? That just seems to be a theme of US, like American politics now is, one side gets in, they basically undo everything the prior admin did and then start doing all of their own changes. And then whenever they get swapped again, you see the same thing happen again in the reverse direction. So, but I guess if I'm thinking about it, like maybe there's a point at which they get cemented enough into kind of like the rules and regs of the day that I don't know.
It's hard to change.
Yeah, is there a point at which it becomes hard to change back? I'm not sure. Maybe that's what you're hoping for if you're the prediction market guy here.
Yeah, this is one of the things with crypto regulation as well, is this worry that Trump came in, America started becoming favorable towards crypto. If he loses, it's kind of like, because if crypto is adopted by Trump, like I said, once again, I'm European and I don't really understand. I'm not European, but I live in Europe, and I don't really understand the American political system very well, so just ignore everything I say if you're an American. But to me, the moment that you make something like a partisan issue, it seems like the other side is going to be like, oh, well, this is your thing, so we're going to reject it, which is obviously a very bad thing for crypto if it happens. And it would be the same for prediction markets. I wouldn't say I have a necessarily positive view of prediction markets. Like, I wouldn't say I'm one of those people that is, I mean, you joked about this today on the Xerox Research chat. Like, what are we going to talk about? Oh, how we can make a lot of money, like how we can make income using prediction markets. I'm definitely not one of those people like the Tulip King type of like, oh, this is revolutionary. I think the vast majority of people bull posting it purely because they read somebody else's article and are saying, oh, wow, he said it's revolutionary. And there are like XYZ applications, therefore it could be revolutionary. I do think there's a lot of people making probably a lot of money on it purely because it's very inefficient. And I think initially it was mostly like regular people, regular here being like very smart people who were not particularly like part of a large firm. I think right now it's probably ripe for the large market making firms, and they're probably making a ton of money on it. Either way, I think it's probably just it shouldn't be regulated too heavily, probably. It is interesting that it's getting regulatory clarity a lot earlier than crypto is. I feel like crypto still doesn't have regulatory clarity properly, versus like they're effectively really trying to make prediction markets be not in a gray area.
Yeah, I think it speaks to the approaches. I guess like Kalshi's approach, it differs from Polymarket, I guess, in practice, in that they kind of entered in as like a CFTC regulated entity, right? By like basically offering a commodities or like derivatives platform, versus like, I'm not sure what the legalese is for like a Polymarket approach. I guess the Polymarket approach is that they were not, you're not allowed to use them in the US. So they were not regulated and they were not allowed in the US. And I think until recently. So maybe they are getting sort of like regulatory approval now. So I think it speaks to that. And like the majority of crypto basically just tried to kind of sidestep US regs for a long time, either because they didn't exist or they were unclear. Like, there were still, of course, there were problems in the prior administration in terms of like what's allowed, what's not allowed. It wasn't very clear. Like, companies were just getting sued. There was a lot of uncertainty there. So, but I agree with your point. Like, we're still sort of waiting for some of that clarity to come, though it's been coming in over this past year and the coming
Not
years.
fully. We're not there, but we will be. I mean, it's also, I think,
and I think, I mean, that speaks to the points we just made about kind of like making something a party issue versus not. Like, it would be equally concerning if I don't know, there's been some back and forth with some of the like the Clarity Act on the exact specifics there and whether or not it'll get passed in the current form, or if it will change, and if it'll sort of like make it through the current Congress or not. And I think you have a real question mark there as well on terms of if it doesn't get passed, within the next year, and then the U.S. government like flips, Congress flips sides from a majority standpoint in the midterms. Do you pass a point of like you kind of missed your shot? Point of no return, in that you could have passed legislation even if it wasn't perfect or like completely up to what you wanted, versus not passing anything at all. TBD on if that happens, but I think that's a similar conversation that people are weighing now. So
yeah.
I think if you're Kalshi Polymarket here and you get this kind of like nod from the CFTC, I would say you're probably quite happy.
Yeah, I think so. But I guess also prediction markets don't really have the issue of like two things. Number one, why I think they have like some issues. Insider trading is one clear issue. Another issue is like very akin to gambling to an extent. But crypto has like money laundering. It's a big one. Sanctions evasion, big one. And then potentially being securities, which is a big one, which I feel like is more complex. versus the prediction markets ones are relatively less complex. Still complex, especially the gambling one, but I mean the other one's relatively clear. So yeah, I have one last thing prepared, and I think I don't know how many people have context on Venice, which is Voorhees. I don't know if I'm doing the traditional Dutch pronunciation, but Eric Voorhees, OG Bitcoin guy, launched private AI / decentralized AI protocol, Venice. Most famous for, do you remember that time they launched on Aerodrome and somebody like insider traded it?
Yeah.
So most famous for that. But they've recently gotten a second bump. I am going to pull up the chart just so that it's not a great chart given that everything in crypto is down, but it's not bad. Oh, you're going to see something relatively embarrassing. Yeah, there we go. So it is up, I don't know, 3x, 4x from the bottom in December, 4.5x from the bottom in December. But more recently, like it doubled over the past week. I think primarily due to, well, not I think, but primarily due to Claude like increased attention in API credits, Claude, etc. They have a pricing model that gives you access to essentially every. They have a business model that gives you access to essentially every leading model, and their like main pitch is that it's unbiased and private. I don't know if that is particularly useful for a lot of people, but I think you just end up getting kind of a good deal. It's like $18 a month and you get access to all the models within like some credit range. But I would be pretty good because like, I don't know, I have to often pick between Claude and ChatGPT. I always pick Claude, but like sometimes I want to try out Codex, etc. Anyway, recent bump. I think the only thing in the market that is relatively interesting right now, just like to give people a bit of a warning, it is up quite a bit, and I did not buy. Just like, and I just don't want to be the guy who top shilled VVV. So I'm just telling you, be careful. Like it is up quite a bit, but it is like, I do think that one of the worries about AI that is like, apart from the civilizational collapse and like collapse of the social contract and the economic forms and whatnot, one worry that people should and probably could have, especially on the more like, I guess, libertarian side of things, is that these things are probably going to be very controlled, and like what they tell you, what they share with you, what work they can do for you, what work they cannot do for you. Like the crypto thesis has very much gone from trustless, well, it's still semi-trustless, but trustless, like private, etc., like cypherpunky, to settlement layer. I do think that AI is one of the few cases where, and I don't mean like decentralized compute, I just mean like paying for stuff with crypto probably lets you avoid some of the like biases and privacy concerns, just because I don't think they're going to develop this in the real world, and I don't think if they do, you want to pay for it with your own credit card with your name on it. So just like something that I like, a very base case thesis, but not something that I am looking to buy or I'm thinking about. Just thought it was relatively interesting.
How do they? I'm just looking at it, and you say you basically get access to a lot of the kind of main models today, and they're priced at $18 a month. I mean, are they just not like burning money to give that to users? Because if you went out and subscribed to like all those models, you'd pay like hundreds of dollars a month.
I think this is the same way that like Amazon is able to price cut people. Because if you have, like, you pay $20 to Claude and I pay $20 to ChatGPT, if we shared our logins,
True.
would make now they're doing this at a massive scale though,
Yeah.
and they're just running an AI proxy in between it.
I guess in that sense, they're just running.
Well, they just have like a billion credits.
Yeah,
Or
they're buying credits in bulk and then just
Yeah.
selling a sub to users, and most users probably query one time and pay $20 for that month. Yeah.
Yeah. Or like I imagine they have like I don't know what the distribution thing looks like, but I imagine like the majority of users probably hit like what 40% of usage, and then 5% hit.
Yeah, like 500% of
usage. And then there's like a significant percent who's less than the 40% as well. So
and then
I imagine it just matches up. They might even have credits, and every time you get payment, you get to buy more, obviously.
And then I'm going to ask the next stupid question, but how's the token integrated into that, or is it not?
So there's a bit of integration. So they have a 2-token model, right? So there's VVV and then there's Diem.
We love those historically.
And it's you can stake to get access to it, but platform revenues buy and burn VVV is the like simplest way of me saying it.
Okay.
And then so it's like semi-related. I don't know how much of the revenues are used to buy and burn it, but it is somewhat related. And somewhere in one chat, somebody said that they're making 14 million ARR. I don't know if that's true, but I should probably do the math on that.
Oh, and then the Diem token gives you access to a certain amount of credits usage of the AI models, which each Diem you stake gives you $1 in daily renewing credit to access all leading AI models through Venice. So I guess in that sense, like that's the trick.
It's not great. It's like those old type of like crypto protocols where it's like, oh, if you stake, you get like XYZ.
Yeah. I can see how the threads are being written about this one right now. Of like, you get $3,000 of value if you stake X amount of Diem tokens today, but Diem is priced at X. Therefore, it's in your interest.
An arbitrage.
Yeah.
I was just about to say that. I saw a bunch of threads saying that you get like value of, I think the value is like $106 worth of AI stuff.
Okay, well, one Diem is $575. So. And it says one Diem is $1 every day. So I think that arbitrage is closed.
Yeah. I think my favorite is when like there's an arbitrage opportunity in crypto, but then they like send it so high because everyone's like, oh, it's an arb, bam. And then there's like now it's like very clearly overpriced by like 30-40%, but they don't close it. Like it just like keeps trading at that thing. Anyway, I don't know. That's
seems nuts.
This is all that I could do on a post President's Day crypto bear market, where one of the biggest pieces of news was that Dragonfly raised $650 million. Like all of crypto is just the smartest and the stupidest people in the world are both complaining that the world is going to collapse and that the social contract is fucked, and that everybody who is like below X amount of capital allocated in stocks is going to be in the permanent underclass. That's my Twitter. There's nothing else happening.
Wait, I'm still learning about Diem and VVV. You mint Diem from
VVV.
Staked VVV.
Come on, man. It's very simple. It's a free model.
Isn't this is Tomb? This is like, yeah.
Let's not overthink it. And just to be clear, I'm not shilling this token. I'm just saying this is one of the only like.
Yeah, I'm just trying to understand it. I'm just trying to understand why like $1 of daily inference is priced at $600 right now. That's
inference costs will go up. If Lou Langer was here, he would write
Well, I guess
about
I guess technically, if I'm thinking about this right, you get $1 of credit every day
Yeah,
for
exactly.
ever into the future. So if I do the kind of the net present value of that token and that that compute,
You need to
then
discount all future to now as well. And
exactly.
the terminal value right now is priced at $600. And you're assuming it goes on for, what are you assuming? I guess like typically it's like 20 to 30 years, right?
Yeah.
Simple as. Build a fucking model. Let's build this model right now.
You got to build a model about how the compute the compute becomes more valuable or maybe less valuable over time. I'm actually not sure. Does the compute get fully commoditized and then the cost of compute goes so low that the dollar every day is meaningless or worth a lot? I'm not really sure.
But the thing is that the dollar also becomes more meaningless over time. you need to put that into the calculation somehow.
All right, Claudebot, create a model for VVV and Diem.
Do you have Claudebot set up?
Make no mistakes. I do not.
No.
Do you have it?
I feel like we never have talked about this. What's your go-to setup?
What's my go-to setup?
Like, are you
Like what
mainly
models I
on
use?
ChatGPT?
I've been using Gemini for a while now.
Okay.
I think maybe this is going to sound stupid, but for my needs, I feel like the models got smart enough like
It doesn't matter.
6 months ago to where like I switched a few times and I noticed like a little differences and then, I switched again. Like, I don't know. I've used them all. I've used Claude. I've used ChatGPT. I've used Gemini. I've used some of the other ones. And I've jumped between them at certain times when I felt like I wasn't getting like the best kind of responses or my prompting like wasn't really helping the answers. But I've kind of landed on Gemini because I feel like it's just giving me the information and the context that I need.
Yeah.
With like the minimal, like I don't need to write like a 16 paragraph thing to tell it how the prompt and like how their response should be structured every time. And I haven't changed since then. And unless it gets materially worse, like if I notice degradation, then I probably won't switch unless some insane functionality gets dropped on my head. But I don't know. Personally, I don't feel the need to like run a Claude bot to tell me about the weather every day. I don't know what people are using it for. Like if you're using it to code something, I can see that 100%, but I'm not a coder and I don't like have a need to build an app right now. And I think if I did, I would probably just like, again, do that like by prompt.
Yeah. I guess most of the time you use it for like crypto research, podcast research, organizing tools, et cetera, right?
They become very good at research. Like
and I think Gemini is the best at that because
I'm very surprised like by how good it is. I'm often surprised that it gets information that I wouldn't expect it to have. And I kind of like wonder where it got it, but there's just so many. I don't know. Obviously, they have the search engine, so they're good at indexing links and sources.
yeah.
So it does a very good job at researching.
Yeah, I think Gemini is very, very good at that. I will say one thing: it has improved drastically since I remember maybe a year and a half ago. If you would ask it a crypto question, it would either source you something from 2 years ago, or it would just like make something up completely. Versus now, I feel like to the point where I'm shocked, where it's like, is this true? Like before, I was like, is this true? And my gut feeling was, it's not. Now it's like, is this true? And it's like, it is. I just didn't fucking know about it.
Yep. There was a change that happened like a year ago where I feel like all of the models kind of switched from, okay, we only know things up to a year and a half ago, and to then, okay, we actually have access to everything on the internet now, and we can know anything as recent as like yesterday. And I think that's when there was like a big step there in terms of being able to research things like fully through prompting. Whereas before it was kind of like you could get background information, but you could not get like very current, up to date information about things because they would tell you that like, oh, it's January 2023. This is everything I know. And you're just like, no, you're missing like 2 years of things that have happened since then. But I agree with you. Like now I'm more surprised in the opposite direction where it'll drop tidbits on me that I'm like, I didn't even know that. And then I have to go and check and see that that's a real fact that happened, versus the opposite, like exactly same experience as you, where before I had to double check that like, okay, you're wrong, and now I have to double check like, okay, you're right actually.
Yeah, I'm trying to do this test now where it's like before when I would ask it about crypto, it would always give me Cardano and stuff. I'm doing this test now with like Claude and Gemini. See, I just said like, what are the 5 most important crypto tokens right now? It's a stupid question, but Claude said BTC, ETH, Sol, XRP, and BNB. I think that's just the top 5 by market cap.
Probably, yeah. I've been surprised, like for researching like smaller teams. Like, hint, if you come on Lightspeed, I'm probably prompting Gemini to get some extra info about you. But I'll also, manually pull up your Twitter and other things and look into your background. But either way, it's become very good, like surprisingly good for, I don't know who's been on the pod recently.
Harmonic.
Perp teams, Harmonic, like it knows all the information about these things, and like it still does. The models are still pretty cringy in terms of like, oh, it's not X, but it's Y. They're like changing the whole paradigm of financial infrastructure. Like you can't really like use what it gives you in pure text, but at least the information about like, oh yeah, these builders were working on, he was working on MarginFi, and then he started working on this other project within Solana. It's like it'll know all of that information all the way up to current date, and I find that very surprising because I think even if you know a lot within crypto, like teams who are maybe like very Twitter centric, like there's maybe not a lot of details outside of like Twitter or Telegram chats. It's surprising to see a model just like pull information like that together from just kind of disparate sources across the internet, because I think it would be hard to maybe just kind of, if you had no info, to just like search Google and find that information.
No, for sure. I will say I think jobs are still relatively safe though, because of what you said. Like, I think if you have no info and you can't really tell, like you can get all of this information, but you need to ask a specific question, like the margin, I think specifically. But like, I know this is a really bad example because I gave it a shit prompt, but if you ask why like the most relevant tokens, Claude includes SUI, but like also it includes Solana, XRP, ETH, Bitcoin, versus Gemini is actually kind of interesting. It said Hyperliquid number 1, Monad number 2, Tau number 3, Dog with Hat number 4, and Ondo Finance number 5, which I think everything apart from WIF, I think is like kind of a cool.
They must be doing it based on like Google search trends or something, or like traffic, like search traffic.
Yeah,
that's kind of interesting.
Yeah, it might be because of my internet as well, by the way. In which case it's like
it knows what you're searching also, so maybe it's factoring that.
Yeah. But then it's also kind of weird now.
It's
like
send me the prompt and I'll give it the prompt and see what the difference is. Let's do this live.
I said quick answer, give me the top 5 most important crypto coins right now by relevancy. Just write like quick answer, give me the top 5 most relevant crypto tokens. I'm going to bring down the entire Google establishment if they're using my data.
Let's see what happens. We're trying this live. Gemini loading. No, it gave me it gave me BTC, ETH, Sol, Link, and Hype.
Okay, see, like that's a pretty good answer, I would say.
Not too crazy. But you also said, what was your longer thing? You said based on
relevancy.
Most relevant top 5 crypto tokens
by relevancy and importance.
By relevancy and importance. Maybe the wording there is important. I'm curious. No, it gave me the same thing. No, it gave me BTC, ETH, Sol, XRP, Link.
Yeah, so
basically
like
the same.
I don't know. They're basically not bad. I think that's a better answer than what I got. But the answer I got was like a bit weird, I would say.
Yeah.
Like with Ondo is a weird one as well. Like, why is Ondo in there? I know they're doing like a lot of cool stuff with like the global markets and stuff, but
maybe Yeah, I don't know. It makes me wonder if it was like anchored to recent announcements from those team or like recent like search trends. That would be my guess. Because Ondo had they did announce something relative. Like it would have been interesting if it gave you like layer 0 uni Morpho, like some of the stuff we talked about, because they were like recent articles or something along those lines. Hype doesn't surprise me in that sense, just because certainly there's a lot of web traffic around it. I agree. Going back to it though, I wanted to get back to this. To your point around like jobs, they're going to take our jobs away. I do think, I mean, I don't know what this says about kind of the average person, but I do think there's this point to be made that I saw Xerox Loris tweeted this earlier about. The most important thing that LLM coding tools do is remove the technical barrier between people with domain expertise and the tools that they actually want. And I think from my experience, this makes a lot of sense. Like you probably have to step a little bit outside of like I don't know, we're all in finance and crypto, and it's not, I don't know, a lot of the knowledge is like very readily available for some of these things, but when you get to like manufacturing plants or like on the ground like engineering equipment, and it's like there's a 60-year-old motor that has a maybe the manual for the thing like doesn't exist anymore, or like a factory just operates in a certain way with like 50 different types of pieces of equipment, and you have a guy who's worked there for 30 years and just kind of knows how those things interact. Like that guy has a ton of value, but maybe that business like has low margins and like they don't hire 10 software devs to like spit out good useful apps or pay SaaS subscriptions. A guy like that with a lot of kind of like expertise in his particular field, I think gets a ton more value immediately out of being able to like make a quick app to track data for himself. And so like that type of person, people who have expertise in a field, I think basically like they get supercharged. I don't think this is a hot take, but if that's you, then I feel like, if you're using the tools and you're making use of them to like kind of increase the value of your outputs in work, then you're basically proving that value to a business. So I think there's plenty of professions where it may be like a net positive for some workers, and obviously there'll be some types of jobs that are just like they're pretty much like rote repetition of tasks, which we're probably doomed to get replaced by software at some point anyway.
Yeah, I think that's a fair take. I also am like, I think the broader cuts might not be like entire software departments get cut off, but it's more like 60% of it gets cut off, and then one person just controls two agents. Like to me, that seems reasonable, but I'm not sure if the replacement for that is like we just get a billion software companies instead of like 100 million that we have right now, or whatever, 333 million that we have right now, or the entire world is doom and gloom and we all die. I agree with your thing that like very niche knowledge workers I think are very important, but the worry that I have over there is that I think some people are like, okay, like let's say you're 65 years old, Danny, and you have knowledge about this one specific factory that does manufacturing of microphone tech, and you guys have like proprietary knowledge. Nobody else knows about it. It's just written on paper, and you're working with AI to implement it and robotics to implement it across the factory. You have to have a junior that you're teaching or juniors that you're teaching. Like you can't just replace everything. So that's the one thing I'm a bit worried about continuity. I imagine most people are thinking about it and are like, oh, we need like continuity at some point. But also, I wouldn't be surprised if like a bunch of idiots just put themselves out of business because they, like, we had this with,
They just like shove all their information into like public
in the
places,
public
and then they
thing.
get like displaced.
Yeah, and then they get displaced, or the only person that knows how to do something just like
Just dies. Yeah,
dies.
that's been a concern in manufacturing for like the past 10, probably longer, honestly, than the past 10 years. But when I worked in manufacturing, that was like a very large concern of the corporation that I worked at. Was we had a lot of people who were, like you said, 60 plus. They're like the only person that knows about a type of equipment, And there was a lot of questions about how do you resolve that going forward if they just like retire.
Or like those stonemasons, they can't find stonemasons in some countries to rebuild some architecture because there's none exist. Like they have to fly them out from Italy or something.
Yeah, it's funny. There's it reminds me of The Foundation by Isaac Asimov. It's a great science fiction book, but basically talks about how like the empire falls the empire falls apart because people like literally forget why and for what reason they like build some of their infrastructure. And it's like, yeah, the nuclear reactors just start failing because we just didn't have maintenance engineers to, check on the thermals. And, people stopped putting together buildings the right way. So they just started crumbling. It's like, yeah, it's something you do need to have. I mean, whether they're people or whether they're robots, I mean, there has to be something that does maintenance. So
yeah,
and passes on information.
And ideally, somebody who is aligned with the future of humanity. So maybe also not only robots.
Yeah, there is also an argument to be made that like if certain things are quite literally crumbling and nobody cares about them, I mean, do we still need them, or do we need them to go away and then like cause a problem to serve as a reminder to people about why we need them? I don't know. I think that may happen in some cases as well.
Yeah, isn't this what? Okay, so
that's a bit doomer though.
That is a bit doomer. Foundation is great though. Highly recommend to any listeners. Okay, I think we're good for today. Danny, thank you so much for coming on. To the listeners, actually, the Solana Lightspeed platform announcement is live. So if you're listening here, you can go and check that out as well. It looks pretty cool. A lot of hard work went into this from the advisory side, from the Blockworks Research side, and from Blockworks in general. A lot of people were involved in this, so I recommend checking it out if you think it's cool. If you don't think it's cool, a lot of ears that are waiting to listen. So if you have any feedback about it, you know what? You could probably even just come into the 0x Research chat and say, "Look, like this needs to be changed X, Y, Z." Somebody will listen to it. We're like as an organization, I think we're very like feedback oriented. And we want to be told when we're wrong as well as when we're right. So if you like what we do as well, that's also obviously appreciated. Okay, fantastic.
Beautiful. Great conversation. See you, chat.